Well, I think doing is an interesting question. There's a lot of people staring at screens trying to work out really what's happening and whether this is a fundamental shift or not. I think they're all asking about inflation, how long does it last, what do you think? You have a conversation about the war is horrible, the human impact is horrible, but it's not really what's driving markets or investment decisions, and so they want to know what we think about inflation and what do you do about it.
What do you think about inflation and what do you do about it?
So I think we have significant inflation and it's not going away. And while maybe we've seen the peak in the US of the absolute number, but sort of if you adjust for the proper housing numbers, it's probably 9.5% in the US at the moment. So maybe that'll drop to 5 or 6 by the end of the year, but it's not going away. And so, we think you have to position portfolios for an extended process of tightening by central banks. The Fed, it's a relatively easy problem as long as they get on with it, because they have good real growth as well as amazing nominal growth. In Europe, it's a tough problem because the real growth is not really anything.
We were talking before the interview about perhaps some of the complacency that we see among investment and market participants because they haven't seen a cycle like this before. And quite frankly, we've had 40 years of a bond bull market that has made it very difficult for investors who have never been active in this kind of cycle to understand what comes next and where they find safety. You and I are a little bit older, so we have seen one or two of these. What advice do you give about where you can go? Because your bonds clearly don't give you any protection anymore.
So I think there's a real question about your time scale. Because at the moment we have this very strong nominal growth. That means corporate earnings are really quite good. If you've got a company that's got some pricing power and got some leverage, actually this is a pretty good environment until the central banks do something about it. If you've got a company like Netflix with no pricing power, sorry, but good night. So people are looking at equities and going, it hasn't been too bad, because we haven't yet taken on board significant moves by the central bank. Yeah, we've gone from pricing in whatever it was, 75, 90 basis points of tightening at the beginning of the year to 250. But remember, Volcker did, well, not quite 200 basis points, I think, just on one Sunday. To actually fight inflation will require a central bank to show that they're willing to put rates into the pain zone.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.